Hello everyone, and boom! What happened to the metaverse? Yes, Facebook, well I'm sorry if you're holding some stock, you're obviously nursing some pain today, but it's kind of a telling metaphor for the entire metaverse story, because really the technology and the computing power isn't here yet to be creating a fully functional metaverse. Hence, we did a deep dive. Where is he? Over here. We did a deep dive, and the poor chap, that's my avatar, by the way, my metaverse avatar, and where'd all the water go? I came to the beach, where's the water gone? That's kind of what Mark Zuckerberg is feeling like today. Where did it all go? No, he's still doing well, and we must remember in life, success is always a two-edged sword. So it's very easy to sort of make fun of Mark Zuckerberg today, but look what he's brought to the world. It is good in many ways, as well as some of its less likable ways. Does this mean the tech bubble is bursting? Well, actually, I think the tech bubble's been deflating for quite some time. There's a lot of tech stocks around the world, even some in Australia, they're already down 30% before this event. So it's sort of like Facebook caught up in just a single day. It was already coming off its highs, but it had looked like very much like a buy the dip scenario for a lot of the true believers. And that's why I think it's going to be difficult for this sell-off to rebound fully. It will have some rebound, but it won't rebound fully because there's a whole lot of people caught long at much higher levels who will get out with any reduced pain that they can. Overall, for the tech sector, though, I think the outlook for the rest of the year is sideways to down, as it is for equities generally. Remember, I did say we'd see some sort of rally, then the market would tire. I think this is part of the tiring process for US equities in general. I've said to keep selling Australia, sell the Australian dollar, sell Australian equities. You've heard that from me before. Something a little bit interesting today was we saw the minutes from the latest Reserve Bank meeting or the accompanying statement. And what the further outcome that we've got today is that they really want to highlight that they're not moving to an interest rate tightening path as yet, because inflation is not in their 2 to 3% band sustainably. And also, it could be me. I might have just misread everything. Maybe the RBA is never going to raise rates unless inflation is actually in the 2 to 3% band, because right now they're right, it's at 3.5%. So maybe inflation will keep going up, and we'll never get a rate hike unless it comes back into the 2 to 3% band. Then again, it might be that the RBA doesn't understand contemporary economics, has never looked out the window, as I call it, and is still reading from 1960s textbooks. Basically, what they learned in university 20, 30 years ago is what they still think. Notice in the commentary from today, the statement from today, the RBA says aggregate wages growth isn't strong enough yet to suggest sustainable inflation. That's a 1960s textbook formula, and that's the basis of their inflation outlook. These people are so far behind the curve. I mean, I already knew that, but now I'm even amazed. Okay, so it's not looking very good at all. They went on to say a couple of other things I had a problem with. I can't recall just now because I'm so flabbergasted. In terms of currency, we saw a big move up in euro. And I'm looking to sell that on the day because I think, I don't know, I'm just surmising, perhaps Russia decided it didn't want all its money in the United States and wanted all its money in Europe instead, or at least some of it. So that could be an explanation for the euro move. It was very sustainable over a few days, building, and then yesterday really took off to the upside. That could have been the last sort of fulfillment, if you like, of a major order. You've got to remember that sometimes there are people out there, national states and people who are moving $15, $25 billion across a currency. They tend to spread it out over a week, 2 weeks, but sometimes if they're in a rush, this sort of price action we see. And then you get, because of the price action itself, it becomes self-fulfilling for a lot of momentum traders and technical analysts and people. And so everyone gets long at the top, and that's why I'm looking to sell the euro. I think the euro could be strong for another 24 hours, but that's probably about it. I'm looking to sell almost immediately, actually. I do think the Australian dollar and Australian equities do have a story of their own, and it's a very weak story indeed, with tremendous mismanagement of the economy coming from the Reserve Bank, a likely change of government coming up, which could make people a little bit nervous, alienation of our biggest export partner. There's no immigration. There's a long list of things why you would tend to have a Sell Australia theme at the moment. And I often think that in Australia, we Australians tend to think how wonderful we are because we're constantly getting our media telling us we're the best in the world. Our politicians are constantly telling us we're the best in the world. But the rest of the world is actually sitting back and going, hey, Australia, great fun place. And you have a lot of stuff in the ground. And we like your fruit and vegetables too. Your wine and your cheeses, perhaps. Not quite French. Some Australian wine's better than the French. But anyway, back to the point. Australia, you're a fun country, but your economic outlook is nowhere near as good as what you think it is. Keep selling Australia for the moment is probably a discussion point in Geneva, London, New York, and elsewhere. Meanwhile, in Australia, yay, we're the best in the world. No. So I think we're doing ourselves a disservice by acting so kind of tribal or football club-like in how we celebrate who we are and our central bank. And it's important to have perspective, to stand back and go, you know what, we're not getting everything right. We could do better, and then we'll have a better future and outlook long term. So for the moment, US equities, tired, rolling over. At best, 2 weeks sideways consolidation, then falling lower. At worst case scenario, they just start immediately dropping away from where they are now. So not a rosy outlook in terms of market direction, but an incredibly fantastic and exciting outlook for people who are nimble about their investment portfolios and looking to take advantage of all the wonderful modern instruments that are available in financial markets these days. For the retail investor who has the advantage, the individual investor has the advantage because you can act far more quickly than the committee save their career type structures of decision making in the big investment banks and hedge funds. That's all from me. I hope you have a great weekend. Markets are very exciting right now. Don't look away. Clifford Bennett, Chief Economist, ACY Securities. Thank you very much.